Welcome to December 21st, 2019 weekly coaching call for Investing Accelerator. So this is the last coaching call for the year, and I'm quite excited as we had quite a good year, make quite a bit of return on a variety of stocks, and a lot of students here are successful. So in terms of today, we have 3 stock picks. One from Lee for IIPR, Prina for TSM, and Francesco for Etsy. So let's start with the first one. So Lee, 50% price drop from its high in 2019. The price drop in July 2019 was due to the overall cannabis sector and its second IPO of 1.25 million shares of its common stock. However, its financial performance has been powerful. Innovative Industry Properties exclusively focuses on owning properties used for the cultivation and production of marijuana. Now, Innovative Industrial Properties, the only publicly traded company, real estate investment trust in the U.S. for marijuana, IPO in November 2017. 2 months later, U.S. Attorney General closed the IPO for the marijuana-related business. As a REIT, IIPR must distribute a dividend to its stockholder at least 90% of our taxable income. Revenue and net income has a positive trend since 2016, has a net income of $7 million in 2018, dividend grows each quarter, and annual dividend yield of 5.42%. Cash and short-term investments, $13 million, total assets, so on and so forth. I'm just going to skip this part. Risk, credit risk. Most of the company's tenants are new businesses with little or no profits which pay their rents. Legalization should help expand its portfolio but attract competition. There are currently 3 bills that are working their way through the Congress that advocate the decriminalization of marijuana. The company's portfolio includes 29 companies in 13 marijuana legalized states. I'm thinking this stock is for a long-term holding like other marijuana stock. All right. So let's talk about the marijuana industry. So as of right now, I would still classify marijuana industry as high risk, especially when you look at how all the companies are scrambling to meet supply, legalize states, advertise, and to streamline production. So it's actually quite a lot of things going on. So I would limit the amount you put in terms of this industry, and focus on safer stocks. Now we're going to go through the analysis, and I'm going to give you a second opinion on this company. So this company has been IPO'd for around 3 years now, and you can see that it was at $15 and went up to $135, and now it dropped back down to $70, which is very close to the bottom part of the Bollinger Band, which is a little bit expanding, and the red line. So if you look at the historical growth, you will see that it actually doesn't really touch the red line. So right now, I would consider it to be pretty cheap. And like you said, Lee, it is at a 50% discount. Okay? All right, so I was researching why it went down, or what this company is about. So let's look at the company website. So basically, they host the property in U.S. for marijuana. So you're pretty accurate. That's what it is for. So when you think about a real estate business, you will have high assets because they own the land. The land is probably can't use for anything else because they used it to grow marijuana. And then afterwards, they collect rent. So the income should be fairly stable and predictable, and so on. So, okay. So that is a brief understanding of the company. And then afterwards, you will see that there's some articles about why it is dropping. And essentially, it's because of the second IPO, like you mentioned earlier. But what I think is that the drop is really because of other marijuana companies are also dropping. So if you look at some of the other stocks like ACB, you'll see that, since April, it has been dropping like a rock. If you look at weed, which is another one, since April is dropping as well. So then it's not really surprising that this company in innovative industrial properties is also dropping. So then the question is whether the drop makes sense and whether it is forming a bottom. So we'll jump over to insider analysis here. So insider analysis, you'll see that Alan Gold, the executive chairman, is actually actively disposing of the stock. Now there's something really weird about the transaction price per share here, but essentially you can see that he acquired shares and execute shares, so I suppose that's a mistake. It's just he redeemed his stock options and then he sold it. So you can see the amounts are pretty similar. So he's cashing out at this level, which is December 17th. That is actually this week. So which is right around 70 something dollars. So you can see that Alan Gold is still selling some. The amount is not that much. You can see it's around 200K, 300K, a little bit more than that, 400K in December. So 400K in December, if I just quickly add it up. So it's all right, I think. But it is, I would consider that a red flag because he's still selling at this level. So then there is that possibility that it will go lower. Okay? So let's look at all the other stuff. Now, if we look at financials, you're going to see that PE ratio, it's almost the same as industry. Now, this PE ratio is quite high, so then I wouldn't rely on it. The price to sales is quite high compared to the industry, so it's overvalued. Price to cash flow, they didn't calculate for us. And price to book, this is lower, but then I would consider this to be outlier. So one is overvalued, one's undervalued, so this is a mixed signal. So for this situation, we'll ignore the financial ratios. Now, in terms of revenue, income statement or whatnot, you can see that I'm going to first use the annual financial statements because you're going to see that there's only 3 years of operations. So it's not a lot of information you can rely on. And if you look at it, for the last 2 years, like the earlier 2 years, they have been making a loss, and recently they are making a profit. So that is good. So you can see it's making a profit here. So yeah, so out of all the cannabis companies, this one is actually making a profit because its real estate is collecting rent, so it's not complicated. So the real risk is if we start seeing cannabis company running out of cash and going bankrupt, then that's when, that's when this company will be in trouble. So here so because we don't have that much information, we need to look at quarterly instead. So quarterly, you can see that this is growing, so that's good. Expenses growing, but what's more important is that the net income is also growing. So that is pretty straightforward. So the company on a financial side is actually growing. Okay, so for balance sheet, let me just jump over there. Let's see where my balance sheet is. Now I'm just going to use quarterly financial, given that there's not a lot of information on it. Now you're going to see the cash balance is growing. Now, as they are a real estate company, I would suspect that's the case. What's interesting is that I actually don't see any property, plant, and equipment here. So that is quite interesting, which is outside of my expectation. And I think it has something to do with the sale leaseback program. So depending on how they set up the contract from an accounting side, they might just own the contract and then somehow the asset is recognized on their on the cannabis company side, which I wouldn't be too surprised. So yeah, this was a little bit surprising, but then if they have a sales leaseback program, then perhaps it makes sense. So I wouldn't worry too much about it. So then afterwards, there's liabilities. And when I compare that to the equity, it's actually quite a low debt to equity ratio, which is kind of like 0.5, maybe a little bit less, maybe 0.4. So 0.38. So that is a good ratio, good amount of cash, so it's not going to bankrupt anytime soon. So the only real risk is really if we start seeing cannabis company going bankrupt, because those are their customers, and yeah, that is the risk. So one of the things I thought when I was looking at the financial ratios is that the price to cash flow was empty. So then I thought they might be making a negative cash flow by any chance. But then if you look at the cash flow statement here, which we rarely use, you'll see that the net operating cash flow is actually positive. So that's fine. And you will see that most of the money is actually used on capital expenditure. I suppose they buy the land or whatnot, and then they use a sales leaseback and give it to the cannabis company, which is what this is. So if you have some time, you should probably read this part. Yeah. So I'm quite sure that's what is happening. Okay? All right. Now, let's summarize. For financial ratios, the result is a mix. The stock dropped 50%, so it's definitely cheap. If you look at other weed companies right now, you'll see that the drop is the same. So it's actually an industry-wide impact. And the real risk is, what do you think about the marijuana industry? Do you think this company is going to be fine? And what happens if marijuana companies start going bankrupt? Now, I do think some of the younger, not so established marijuana company, because they're not revenue generating, it's going to be a bigger risk for them, or profit generating, it's going to be a bigger risk for them. But if you think about it, the worst case scenario is let's say a couple of them go bankrupt, and I suppose innovative industrial properties will collect that marijuana company land back and then resell it to another company. So in the short term, yes, that will be a problem. But then once you think about it, if the companies go bankrupt, they're going to collect the property back and then resell it back to someone else. So then technically this company is in a no-lose situation other than missing rent. And so far you will see that rent is being paid because there is cash flow coming in. So then the question is, well, what is the bottom then? So right now, if you look at it really close to the red line, you're going to see that it is kind of forming a W, and it is really close to the red line. So I think there is an opportunity to enter even a little bit lower, but right now is pretty low. So the question is, should you use option on this trade? And I think looking at the amount of dividend you get and a payout ratio, which is around 50% here, it's actually quite high for what it is. It's actually quite high. So, okay, let me revise that. I actually think it's okay. If you want to use options, I think that's okay. But then as you can see, the dividend is actually increasing over time. So then if you want to get this dividend over the long run, then you want to use stock instead of options. Now, in terms of timing, given that Allen is still selling around 1 million, if I remember correctly, for December, I think you can wait a little bit more before you enter. So you might be able to get a cheaper price, but the amounts he's selling is not that much. It's not like millions where we're seeing in some of the other stocks. So yeah. So if you want to use stocks for long-term holding, kind of like a safe, not safe, well, kind of like a growth plus dividend income fund in your portfolio, I think that's fine. But if you are interested in options, then I checked, there is 2020 options as well. And if you are going to be buying the options for this stock, I would think that you want to buy somewhere below $60 for sure. So you can see that this red line and this Bollinger Band right now is still expanding a little, so I think it might go a little bit lower. So you might want to aim for 50 to 60. If you want to be more conservative, you can aim for 40, but let's see if that's even available. Yeah, so that's available as well. Yeah. Okay. Yeah. I think so. Below 60 to 40, so you can choose. And remember, you don't want to use the last price. Instead, you want to use the bid and ask. And right now you can see there is a difference because it's not like heavily traded as of this moment. And you definitely want to use the longest option possible for this one, because I would consider this to be high risk, given everything else that's happening with marijuana stocks. So you can fill out the option calculator and let me know if you have any questions. But I suppose that would be not a problem for you. So let me just take a look, because there's actually something I want to check for you. So your strike price is really somewhere between this range. Looking at it, I would probably pick something like 50. So that will probably be a better range, and you can evaluate whether it makes sense for you. Yeah. So one thing I wanted to check for you is actually some of the other stocks. I need to look at Insider. So Insider tracking. So majority of these stocks are Canadian, so then we just gotta use insidertracking.com instead of MarketWatch. That's not what I'm looking for. Weed. So let's look at a couple of them. CGC. Okay, so this one is weed. Now let's duplicate this. And we also want to look at the other one that we previously looked at, ACB. Okay. And CGC. So the tricky thing is, you need to develop a view on weed stock to invest in this stock, because if you think weed is not going to perform well, then you want to be careful. Okay. All right. So right now I'm trying to pull up, the 3 stocks that's off the top of my head, and let's see the insider activity for it. So this one is not available, so let's go here to get this. CGC. There is none. Okay, well, if there's none, there's none. Let's see if I picked the wrong one, if that's why. Yeah, there's none. Okay, all right, no worries then. Okay, so ACB and weed, these two are some of the largest marijuana companies. So let's look at what's happening here. So in September, you'll still see that there's a lot of sale happening. Disposition, exercise, which is just, getting disposed afterwards. And then if you look at recently in December, you actually see some buying from Eric Kelvin, or if I said it right, weed. Probably should search his original name, but. So he's a CEO, David. So CEO got granted a lot of options. Now, if you look at the timing here, let me just search this guy up as well. If you look at the timing here, it should be at quite a low. So president. Okay, so the president and the CEO are granted a lot of stocks for this company. So that is good because right now it's at a low, is at $26. Previously it was 72. So it's what? 60 something, 70% drop. So this shows confidence and support as long as they're not selling immediately. Yeah, so I think this is good. So there's insider buying, which suggests that it may be a bottom. Now for the other one, you're going to see that this guy, Terry, I think he's the CEO if I remember correctly, also bought some for ACB. Now this one is a bit more tricky because you're going to see that Jason here also sold some. So let me just take a quick look to see who that is. So Terry is the founder and the CEO, and this guy who's selling, let's see who he is. Director. He's a director. All right. So I guess we are getting some sort of conflicting information here because you have one guy, the founder, is buying, and another guy who's the director who has less information is selling. But then you also get these two people selling. So let me take a look and see what these two people, who these people are. These two are probably directors as well. Oh, he's the chairman. So the board of directors. Okay, so got that. So probably these three are all directors. Yeah, board of directors as well. Okay. All right. You see that the volume here is actually overpowering the volume here. And this is a month ago. So I guess for ACB, the bottom still hasn't formed yet, so then you want to be careful. So I think for this stock, in the end, you need to develop a view on the marijuana market and what you think is going to happen in the next 2-3 years. I think because that you see Allen Gold is still selling a little bit, you probably can wait to see if you get a deeper discount. Yeah, because you can see the bottom part of the Bollinger Band is still expanding. So I think you can wait a little bit. But if you want to invest now, then I would suggest you to put in maybe 1/3 or less. 1/3 of what you want to invest in or less. Okay? All right. So that is innovative industrial properties. Okay, Prina. TSM. Now for TSM, I know that you're quite excited about this stock, but if we just look at the chart, you'll realize that right now is not a good time to invest because it is at a high. So looking at a chart, you can see that right now the stock is boosted up here. So if I'm any investor that bought here, if I bought like any amount of stock here, I would be exiting right now. I would be cashing in because it went from $40 to $57. That's like a 30% growth. So that's like 42% growth. So then I would be cashing in right now. So if I'm cashing in and I bought here, which a lot of people bought here, hypothetically, then I'll be cashing in. So you don't want to be buying right now. So, so for this stock, if it is a great company, which I'm going to check for you right now, chances are it is great, then just keep it on your list and then just watch it. Because what you need is to wait for some sort of downturn, some sort of correction, some sort of discount before you can jump in. And chances are it's actually an okay company. So let me just bring that up. So here you see that the company is growing on a, quite a steady manner, and then you see that it's making a profit. So chances are it's going to be fine. As it is at a high, I'll not do the research for now and just wait. So unfortunately, there is no insider information for this company, I suppose because it is Taiwan. So then, yeah, I would suggest you to wait. You want to really be entering near $42 between the red and the blue line. Okay? All right. So last stock, Etsy, Francesco. So this time is actually Francesco's first time recommending a stock for the weekly coaching call. He's our subscriber. So I just want to say good job, Francesco. So you happen to pick a stock that is at a discount. Usually, if a stock is not at a discount, I wouldn't cover it. So for those of you who don't know, Etsy is really an e-commerce site developed for independent artists, and they sell specialized handmade goods usually, and it is sold at a premium, so people can kind of express their creativity and while starting an e-commerce business. So that's really Etsy, and you can see that the growth has been phenomenal from $12 all the way to $72, and recently it dropped back down to $44. So this is quite a deep discount. So that's a 40% discount right now, and right now the stock is between the red and the blue line. And you can see the Bollinger Band is actually becoming a little bit more horizontal, so that is also a good sign. So right now the price is 44. So let's jump into insider analysis. So here you're going to see that the chief product officer is buying some sort of derivative here in December. And other than that, there's no other transactions in December. And in November, you're going to see that there is some sort of purchase or sale. We actually can't tell this time because it says gift here. So there's something weird about the insider information, but then that's $500,000. So if we look at the price and it's 40 something dollars, November 4th, here, chances are it's a buy instead of a sell. So we have two buy transactions, one from a director, one from a chief product officer. And obviously the product I think it's referring to is the website itself. So afterwards, you're going to see some sale at 56, okay, 56, sale. So that's pretty straightforward. 50 something dollars for sale. So that is the zone that you don't want to get into, which is right here, 50 something dollars for sale. So that's pretty straightforward. Okay, so from an insider perspective, we see a lack of selling after the drop and also some buying, so that's a good sign. Okay, now let's look at the income statement. Now, if you look at the income statement on an annual basis, you're going to find that the company has been growing 20 to 30% a year, sometimes a little bit higher. And for net income, it recently turned positive in the last 2 years. Now, you will see that the net income is not growing that much. It's kind of stable at $70 million. Now, if we jump into the quarterly financials, and we're jumping into the quarterly financials because the reason for the drop is because something to do with the quarterly financials. So here you're going to see that 150 million, and then you're going to see December, Francesco here, is one of the highest months, and then afterwards it drops back down in March. So this is probably December sales, and then afterwards you start to see that it increases again. Okay, so there is seasonality, and right now it's December, so it's supposed to be a very good quarter for Etsy if it is performing well. Now, if you're looking at net income, this is where the concern comes in, because if we look at revenue, you get 197, 150 here, right, which is an increase. But if you look at net income, this Q3, which is 14.8, is actually lower than 19.8. So, I thought that was kind of a weird trend, so I start to look at why that is the case. And it's really because of the expenses here for sales, admin, general expense, and R&D. So then afterwards, I need to do a little bit more digging in the financial statements. Now, if you're part of Investing Accelerator, then you'll learn more about this. But essentially, here, I'm trying to understand, why there is a change in marketing expense, general admin, and R&D. So here, you can read the paragraph, saying, there's an increased cost to acquire buyers. That means increased cost to grow the platform. So then they had more marketing expense. And right now, they actually mentioned the holiday television ad campaign and the acquisition of Reverb. So I think you should dig a little bit deeper into the holiday television campaign, and what's your view on whether it is good or not. If you think the holiday ad holiday television ad campaigns are good, then this will boost your confidence. And if you think Reverb is a good company, just do a simple Google search, then that will boost your confidence as well. So that's it for the marketing side. Now for the R&D side, I think is actually pretty consistent, but it's mainly employee-related expense. Now for general and administrative, you're actually going to see an increase and also a percentage increase. So this is as a percentage of total revenue. So there is an increase basically at the headquarter level. Now, so they have quite a number of things happening in here. The easiest one is an increase in headcount. So they hired more staff. They have some employee-related expenses, and they have also some professional services fee. Now, we don't know how much this is, but there is something to do with the lease. The lease in Brooklyn. So this is really an accounting issue where, from time to time there are some new standards being released, and this year is one of the years for a new accounting standard impacting leases. So then I suppose they hired their auditor to do some analysis around it. Okay, so that's that. So you can see this increase here. So there's two ways to look at it. The first way is, well, they're increasing headcount, they're increasing the cost structure, but then the revenue is not growing yet, so that's bad. So if you think that way, then you probably don't want to buy Etsy. But if you are a believer of Etsy and you think their management is good, then you can think that, well, right now they're adding more headcount, the platform is growing, but as of the moment, they haven't realized the return yet, because right now it's Q3, it's not Q4, so I suppose a lot of the action will be happening in Q4, which gets reported in January. So if you think about it that way, this hiring earlier may be a positive thing, because you're really hiring more to meet the December demand. And second of all, for the Brooklyn headquarter lease, which is related to the professional services, I think this is mostly a one-off thing. So it's a change in accounting treatment, but once it is changed going forward, you just continue to do what you did last year. So I think the increase in administrative expense is reasonable, and if that led to a lower net income, I think it's still okay. I wouldn't worry too much about it. And if you look at revenue, right, like this year revenue is still better than last year's revenue. So the question is, what do you think of this year's revenue in total, and what do you think about the net income in total? So for this, I'm going to do an exercise for you where, because we don't have the December number, we need to use last year's December number to kind of estimate what this year's full year revenue looks like. So essentially all you do is just, you take the 200 plus 169 plus 181 plus 197. So this gives you 747. And if I go back to annual financial statements, then you can actually compare the revenue on an annual basis before December ends. So you'll see that this is 200 million and it grew to 603. And right now we're expecting 747 million for 2019. So assuming this year's December is the same as last year's December, which chances are it's going to be better, then we're really looking at a revenue between 750 million to 800. So I think there is growth. So that is definitely a positive. So let me do the same for net income as well for you. All right. So again, let's assume, this is the December for this year because we don't have a figure for it. So 41 plus 31 plus 18 plus 15, 14.8, just to be more accurate. 41 plus 31 plus 18 plus 14.8. So 104. Okay. So yeah, 104. So 104, again, net income, it's higher than this year and the last year. So net income for this year for Etsy will be the highest it has ever been since its IPO. So I think that level of growth should be positive and have a positive impact on the stock price. Okay, now let's jump over to balance sheet. Now, if we're looking at balance sheets, you're going to see an increase in cash. So let me just use quarterly financials. Actually, both doesn't matter in this case because you can see an increase in cash, so that is fantastic. There's some fluctuation in accounts receivable, but I wouldn't worry too much about it. It just fluctuates. And then afterwards, they did say they acquired, a company, Reverb. Maybe I said it right. So here you might want to look into that. So you want to research the company and make sure you're comfortable and you think that it is a good purchase. And then afterwards, in terms of debt to equity, you're going to see that right now it's a little bit above 2, which is not ideal. But if you think about it, it's really because they recently bought this company, so then they use some debt to buy the company. Because if you look at it earlier, you're going to see the debt to equity ratio is actually almost 1-to-1, maybe 1.2, and then they use debt to buy the company, plus some equity, I suppose. So then that's why you have this jump here, and you also have a jump here, yeah, and jump here. So that makes sense to me. So what you need to check out now is, what do you think about this acquisition for Etsy? All right, so for insider, okay, let's go through the ratios as well. So for ratios, you see that this is positive. This is positive, but it's kind of far, so I would treat this as an outlier. And this is, undervalued, so I would treat this as undervalued as well. So this is a mixed signal, so let's just ignore it because it wouldn't be useful in this case. All right. So let's summarize. Insider analysis for Etsy. It's good. We see some buying, and we see that people stop selling after $54. So that's great. Right now, the price is between the red and the blue, which is pretty cheap, and you're getting a 40% discount. For Etsy, we know that the net income and the revenue will continue to do well, and we know that the expenses that happened for increase in headcount, it's really, kind of like an investment for the future, where if you expect this December to be good, they are spending more money on advertising headcount to fulfill the demand. So I think that is reasonable. There is some fluctuation in net income when you compare this quarter to last quarter, but so people overreact and they sell the stock. So I think that's fine. So that is actually an opportunity instead of, the danger. So the next question is it forming a bottom? And I think as of right now, this is the 6th week of the bottom, so it's semi-mature, and I think, you can probably invest a little bit or 1/3 right now. And then you can think about whether you want to invest more as time goes on. So right now it's pretty cheap. It has been forming a bottom for 6 weeks. So I think it can be a good buy. And if you're looking at the stock, right? So Francesco, you're not in Investing Accelerator, but I checked and you can use options for it. So this is something I teach in Investing Accelerator. So don't use this until you actually go through the program. So for the students that are in the program, then chances are you're going to be using options to kind of multiply your profits. So if that is the case, then you probably want to aim for a strike price that is at least below this Bollinger Band, so below $36. So you would aim for somewhere between 35 to 30. I think that would be pretty conservative. Now, looking at how wide the blue and the red line is, I think the probability is pretty low in terms of reaching the blue line. So I think, somewhere between 35 to 30 would be a good option price. So if we look at it here, so you basically have two choices, which is 30 or 35. So here you're going to see the middle part is $20. So that means the price to double your money is $70 for the stock price. So $70 to double your money. It is a little bit high, I think. Chances are you're not going to reach the price here to double your money, but I think it will probably end up somewhere here. It will probably end up somewhere at $54, $55. So this high will probably be where you're at. So you'll be able to make like 30 to 50% using options here. Yeah, so that's my analysis for Etsy. it's quite a good stock, I think. So good job, Francesco, for choosing it. I think the financials are good. People are too harsh for the interim financials, given that there's the lease accounting, given that they're hiring more people, given that they're running a special holiday campaign. So yeah, good job. So that's it for this week. Let me know if you have any other questions. I'm going to be posting this in the community and the membership site. So yeah, I'll see you after the New Year's for our first coaching call in 2020. Thank you for all your support. And yeah, let's make some money.